And I want to welcome each and every last one of you all this evening to BYOB Market Talks. Once again, my name is Tasha M. Dyer, the creator of the BYOB Cashout. And I just want to welcome each and every last one of you all this evening. I hope you all had a wonderful, wonderful, wonderful week, right? You guys been cashing out this week. Now, let's see what I want to talk to you about this evening, right? Like, what do we want to talk about? No, this is BYOB Market Talks. Seriously, though, I'm in a good mood this evening just because you guys have been cashing out, just because you guys have been having a great week. And the month of May is coming to an end, and this has been our cash out month. I hope you guys did not forget, right? I hope you did not forget that I wanted account increase. I declared and decreed that you all would be, you say, no, ma'am, you did not forget. So we declared and decreed that you all would increase your accounts, that you all would cash out. And I saw that it was what, 3%. I even saw one, I saw a 10%. I even saw a 65%, you know, so I'm excited. I'm excited behind that because right now I feel the market is trying to correct itself. I feel that you guys are doing a phenomenal job. I see people going in for compounding, you know, pulling that compounding sheet out to where you're like, okay, knowing what you have to make a day. I got messages about people journaling their trades. So just taking it seriously, because you know the life, the legacy that the shift that this can give you. And I'm telling you, be your own bank. BYOB is literally about you and your family, about 1 million families financially educated and impacted. So why am I excited at 9 p.m. Eastern Standard Time on a Thursday, right? Because this is our last training call for the month of May. 40 calls a month, right? But this is our last call for the month of May. And we declared and decreed over your accounts. And and it happened. It happened. So I'm excited. So guess what? It's only up from here, right? It's only up from here. So we can only increase from here. It's no turning back. It's no turning back. So if this is your first time on a call with us this evening, let me get a 111 in the chat. If this is your first time on a BYOB Market Talks call, let me get a 111. And if you are still learning how to cash out, let me get a 222. I mean, people went live this month and are cashing out. You know, I'm excited. You got to be excited. You got to get excited about that. So you have to get excited about that. So let me share my screen with you guys. So let me tell you guys, welcome and welcome back. And welcome back. So now, let's see here. What do I want to share with you all this evening? I want to talk to you about maximizing the tools, okay? That's what we're going to talk about this evening, is maximizing the tools. So we're going to talk about maximizing these tools because it's very, very important, because these tools can literally help you. So first, I'm going to talk to you about the BYOB Cash Out, and we're going to talk about maximizing these tools this evening, okay? Now, I know on Thursday, and it's important to understand how on Tuesday, it's important to understand how all of these tools work, because you want to have a variety of different things that you're able to pull from, right? You want to be able to do that. But we always going to bring everything back here and be able to BYOB it. So on Tuesday, and we talked about the bounce back. So we haven't really had many trades come through there this week, but that's okay. But you know, we did have, this is just the market, in my opinion, is trying to correct itself. You see the indices have been rising. We definitely had a trade that literally, this one right here that we put up yesterday, and it came back, and it definitely, you kind of see where it stopped right here and it turned around. So I definitely want to talk to you about how to take a partial profit, because our goal is to make sure you stay in profit, okay? Our goal is to make sure you stay in profit. And so we're gonna talk about BYOB cash out to make sure you bring everything back here to do, to bring everything back here and make sure you BYOB cash out it, right? BYOB is so you can cash out. So that's what we're gonna talk about this evening. So I wanna make sure I welcome each and every last one of you all that dropped that 111 in the chat, right? I definitely wanna welcome you all. And then of course, for those of you who are 222 and still learning how to cash out, one thing I want to emphasize, and if we have time, we'll hit on that again this evening, is I want to make sure you guys know how to do your homework, which is supporting resistance lines. We have seen the light bulb go off, the epiphanies happen with those of you who are beginning to understand the market, because you guys have actually gone and done that where you understand these support and resistance lines. I cannot stress that enough. Okay, to where that is literally a lifeline. Okay, I want to make sure that you guys understand how to do that. So what is the BYOB cash out, right? What is that? How do I trade that? How do I understand it? You're looking at three simple things. You're looking at three simple things. I mean, it's as simple as 1, 2, 3. Now, and I don't want you to overcomplicate it, and I really want to make sure you have an open mind, okay? I really want to make sure you have an open mind. Now, as you're looking at it, okay, what you're looking at is, I want you to see that it is a stochastic, it is a Hikanashi candle, and it is a PSAR. That's it. It's that simple, okay? Now, as I'm looking at this, understand that my stochastic is definitely is momentum, okay? It's the momentum in the market. Now in this, it has moving average. It's definitely moving averages and things of that nature. So I want you to understand those calculations, right? So now this is definitely, right? This is definitely a Hikanashi candle. This Hikanashi candle is not Japanese candles, okay? Not Japanese candles. So as I'm looking at these Japanese, as I'm looking at this is what I want you to understand from Japanese candles. So this Japanese candles, these Japanese candles, they form differently. So I want you to understand these are Hikanashi candles and they are a lagging indicator, right? They are a lagging indicator. So now you got your PSAR, right? Your PSAR, which is a parabolic stop and reversal, okay? A parabolic stop and reversal. Now, this is definitely a trailing stop loss. So I don't forget, because I always tend to kind of keep going, and I don't want you, I want to make sure I discuss this now. Your stop loss is never on your PSAR, never on your PSAR. It's always above or below. Like if I'm buying, if I'm selling, it's above, okay? Where you drop it is where you drop it. How far above is completely up to you, okay? It's just not on. The market, so there is no, it's gonna be 2 or 3, pips above, or 15 to 20 pips. No, the market is going to tell you how many pips your stop loss is. So that's what that PSAR is for, okay? That's what this PSAR does. The PSAR is telling you where your stop loss is. It's just not on the PSAR. It's above the PSAR, or in this case, it would be below the PSAR. So what we're looking at right here is a sale. So of course, now how much you cushion it, once again, this is up to you, okay? This is up to you. So you make the decision how far you cushion your stop loss. So if you want 1 pip above, or if you want 10, 20, 30 pips above, that's completely up to you how much you cushion it, okay? There is no standard. There is no You know, it is nothing that you sit there and, okay, mine might be a little bit more cushion than yours, you know, based on your trading style, your risk analysis, and, you know, what you want. So this, of course, is personal. So I want to make that clear. Now, as I'm looking at this, okay, as I'm looking at this, now my stochastic, now understand these numbers, right? They run from 0 to 100. Now, as I'm looking at this, these numbers run from 0 to 100. And you see that the shaded area is 20 to 80, okay? Now, you see I'm looking at the blue line cross over the red and a downward momentum. I got red candle with a flat top because I'm looking for a sale, and my PSAR flips to the top, okay? Now, I'm gonna put an arrow here. Now understand this arrow, look at this. Nothing but space and opportunity over here, okay? Nothing but space and opportunity over here. So you wouldn't need an arrow. I just want you guys to be able to stay with me. So please don't have arrows on your charts, because you're gonna mess up your entry if you do that, okay? You're gonna mess up your entry if you do that. Now, I wanna be very, very clear with that. I don't want you messing up your entry. Now, as you do that, 2% rule, what do you mean 2% rule? You're talking about when somebody says don't risk 2% of your trade or 2%. That's something that someone made up. Now that's something that, now think about this. That's a good question. Now think about this, right? My background, financial advisor, okay? If I go down to sit down with someone and I was to sit down with you to do your retirement plan, I'm going to ask you what your risk management is. What is your personal risk management? Legally, I cannot tell you what your risk management is. I cannot tell you by law what your risk management is. I have to ask you a series of questions that is going to determine. So it's all personal preference, right? It's all personal preference. So that's what that compounding sheet and that spreadsheet is. And this is about you understanding what the market is telling you, right? This is all about you understanding the market. So what this PSAR does is the PSAR is the market is telling you where the stop loss is. This is the market telling you where the stop loss is. So you allow the market, that's why this is market talks. You allow the market to tell you and the market to talk to you, right? And that's what I'm showing you how to do. Just allowing you to hear from the market. That's what this is, right? So now what I'm gonna do is I'm gonna just drop down, right? I'm gonna drop down for time frame confluence. I'm gonna drop down to my 5 minute, okay? I'm gonna drop down to my 5 minute. And when I drop down to my 5 minute, and when I do that, now at my 5 minute, you see that I'm still selling. I need to still be selling. And when I go up to my hour, it needs to look like something I put on my watch list, something that I'm selling, something that is setting up for a sale. Now, look right here, okay? Look right here. Remember, I don't see all of this other stuff. I don't see any of this right here. I don't see any of that. So what you're looking is right here, okay? This is what you're looking at right here. So this is what you will see. And so it appears that you got the blue line crossing over the red right there, and you got a red candle, right? That's what it appears that you have. So of course you be going in to take your trade because you actually have your time frame confluence. Okay, so that's the BYOB cash out. The 5 minute, yes. We just checked the 5 minute and it was still selling. It was selling. Remember, I can't see this little pull up right here. I didn't see that pull up. So you got to remember it was selling when you look down. That candle is all that's selling. So the next candle is where it pulled up. So actually it does matter. But it's like you almost don't want to get too caught up on like this morning we took a trade or we were looking at a trade, and remember the 5-minute flipped so fast. That's one thing you want to remember too. The 5-minute moved so fast. We had the stochastic pointing down. We were looking for a buy, and as soon as we flipped, we looked for something else and came back, and it was already pushing back up for the buy. So just remember that 5-minute moves so fast. So look at it, but don't stay hooked on it too long, right? Because if everything else is in alignment, then it's probably going to push through, right? And that's what you'll begin to understand, and you'll begin to feel with them as the market is speaking to you, right? And so one thing I also want you to begin to see is that if I'm sitting here on this hour, which is you'll see this in just a moment. Like you see this hour is beginning to see push down. So if I'm looking at it from a confluent standpoint, right? A confluent standpoint, then when it drops down, okay, it drops down. When it drops down, you can see where it begins to align on the 15. Now, remember, you're still trading the 15. So if I'm trading the 15, you can see where it pushed down, and you're actually, that's 17 that you would have been able to get out of that one. So you can see where your confluence is beginning. On that hour, you can drop down and you can begin to take trades off of this one. Now you can kind of see it's still got some room to push down. You can kind of see where it's at. So it hasn't finished, but just to kind of show you, because it's kind of stuck right here on this support line right now. But you can kind of see where it's at. It doesn't have confluence at the moment, but it's been kind of riding that support line for the last few hours, just to kind of let you know where it's at. So let's look at, let's look at any questions, comments, testimonies before I move on, because I want to show you a few things. Questions, comments, testimonies. Well, right now we were in the past, not the current. I'm not telling you to take the trade right now. We're looking in the past. I'm definitely not telling you to take the trade at the moment. You can trade on any time frame. The one I was just showing you is off the 15-minute time frame. But yes, you can trade on any time frame. But the example that we're going over is the 15-minute. And we always start from the 15. The 15 is where you get your 10 pips and cash out. Does the stochastic have to line up? It makes for a better trade. It does make for a better trade. So you want it to look like a watch list, right? I want it to look like a watch list. So let's go back over here. So let's start here. So if I'm looking at this one, okay, let me move the arrow back this way. So if I'm looking at this one, hadn't looked at this one yet, right? So if I look at this one where this doji started, where it looked like it's kind of starting to point down, or even this next candle, let's actually look at where this one started, right? And let's drop down to the 15. You can see, if I do that, where I'm trading on the 15, you can see where you got a solid setup on the 15. Now, if I push it back to where the doji actually started, well, we began to get some confluence, because some of you guys are not going to touch it from the doji. I already know that, right? Just for your comfort level. So, and that's okay. And then you drop down to the 15, you can actually see that it didn't even start right there, right? So it didn't even start right there. So it really wouldn't have mattered. So where it actually would have started, you can kind of see, was toward the end of that doji, toward the end of it. And then of course, if you would have waited, it started, like I said, toward the end of that doji candle, which is where this trade actually, so like the last 15 minutes of that hour candle, and into that next candle. So if you would have waited, right, you would have looked at that one. So if you would have waited till you were more comfortable with that more solid candle and even gearing up in that doji candle, this is where this trade actually began on the 15-minute chart. So this one, of course, like I said, right now where we are, you know, on this one has been riding this support line, but you can actually see where it actually broke through earlier and came down to a support line earlier on this one. So it works the same, right? It definitely works the same when it pulled down. So just to kind of help you understand, you know, as it pulled through, right? And so this is, you can kind of see where it's lining up. So does it make for a better trade? Absolutely. I don't want to, you can see where it had pulled down, where this one got ready on the higher time frame, right? It got ready and never pushed through. Look at what happened with my stochastic. My stochastic pulled up here and then it pulled back down. So if I'm looking at what happened right before it, right, my current swing in the market right here was pulling up. So most of you all probably, if you were scalping or if you were trading, right, you would have pulled up, right? That's about, what's that, 40 plus pips that you would have grabbed on that, in that correction right there, because this is GBP. So you would have grabbed those 40 pips. I already know y'all would, GBP USD 777 in the chat. So you guys would have grabbed that coming up and then turn around, because you would have saw this, right? You would have saw that, and then you would have turned around and you would have grabbed your pips going up. And then of course, this is that stochastic you were asking me about, and you can kind of see that alignment and you drop down and you grab those pips. Now remember that you want the stochastic moving. So the stochastic is not going to stay at the 80. It's not going to stay. The stochastic is going to be moving. So, and that's a perfect example of the one we're looking at right now. You see how, look how this one moved all the way down and then pulled back up and then went down. So it bounced down and pulled back up and then went down. So that's a perfect example of your question right there. You see how it moved it actually went all the way down, came up for a correction and then pulled down. So that's your question right there. I mean, that is literally your question. The momentum pulled all the way down, but it stayed up here on that support line. And then it pulled up for that correction and then it pulled down. So that's it. So let's go and let's look at now. So what I'm looking at right here is Euro NZD. And so what I wanted to show you is something that actually kind of played out, right? And I'm not pulling, because this is market talks. I'm not looking at current alerts or current trades or current right now. And so I'm just trying to show you the difference, because on the calls in the morning, you know, we've pretty much done our setups from like the harmonic scanner or something like that, right? So if I'm looking at this, right, and one of the things you really want to understand, and this will help you understand a strategy as well, is that when you're looking, you actually have these areas of value, right? You have, if you understand price action, you understand that you have your trend, you understand that you have your support and resistance lines, and you understand that you have your moving average, which are your areas of value. And with those areas of value, so if I'm looking at this, right, you have your impulse, you have your correction, you have your continuation, you have your correction, continuation, correction, and so on and so on. And so with that, so you can understand the vibrata, right? So you can understand the vibrata and how it works, because I'm going to explain to you what this does. So what happens is, at each one of these, if you look, like these are trend candles, but if I was to come here and I was to just draw, like, let me just put a trend line on here for the sake, so you can kind of just grab a glimpse. And don't talk about my trend line right now. I'm trying to make a point. So if I'm just looking at this, and then of course it breaks that trend line. So that's like a downward trend, and then it'll break that trend line. So if I'm just looking at that, what you see, you also have, you have a trend, right? And then you also have your support and resistance lines. I'm gonna change the color of these just because I'm not focused down here. This is for something else. So I'm trying to show you something else down there. So at each one of these, right? At each one of these, you'll have what's called an entry trigger. So you notice that as this trend is moving downward, right? As I'm moving in my downward trend, where I get my correction, right? Where I get my correction, and you know, you got your impulse correction, continuation, correction, continuation, correction. And it's not always cookie cutter, but you can see it. Where you get that is at where pretty much you see where these support and resistance lines kind of meet this trend line, right? And of course, if you were trading in a downward trend, if you kind of remember from the academy a little bit, this would be where you would enter on your sale. That would be where you would enter on your sale. That would be where you would enter on your sale, because I probably need to move this over a little bit more. But that would be where you would enter on your sale, right? That would be where you would enter on your sale. And of course, you're probably used to seeing it with Japanese candles, but that's okay. But that will be where you will enter it. So what happens is, so you don't have to do all the heavy lifting. What the vibrato does is it scans the market for you, and it identifies at these entry triggers. It identifies something that happens at these entry triggers. So what you don't have to do is you don't have to scan the market through each currency pair trying to identify a trigger, because at each one of these is a trigger. At each one of these, it happens, there's a trigger. So sometimes you notice you'll probably scan through here and you'll see the same currency multiple times, right? I'll see this currency and I'll see it again and I'll see it again. And that's because you'll see, bam, it triggers here, it triggers here, it triggers here, it'll trigger here as I go through this downward trend. That's why you see it several times. And then also sometimes you'll see it on the lower time frames too, because within this large movement, you see it also happening on a lower time frame. And so you see a lot of times I'll pull things up on a higher time frame, because the higher time frame dictates the movement of the market, where the lower time frame is where all the action happens, right? So that's why you always see me pull things on the higher time frames. It's harmonic scanner, vibrato, wherever it's at, that's why I'm pulling it on this higher time frame, right? And then I drop down to the lower time frames. So that's just my personal preference. Some of you guys don't mind pulling things on those lower time frames, right? You say, you wonder what right, exactly. Those are just entry triggers. And so that's why sometimes you'll see me tell you guys, I don't care that it says potential sale, potential buy. I'm not really focused on what this says, because I know it's just an entry trigger. There's a trigger, and then you still have to come apply the strategy. It's nothing more than a trigger. It's scan the market, and it's identified a trigger that has happened right here. So like, for example, this Euro NZD, it scanned the market right here. It happened at, you know, so we're here at this 1500, at this candle, right, at this mark. And so right here is where it triggered the market. There is something that happened in here that it is a strong potential. There is something that's turning the market at this point, that is identifying that there is something that is turning the market for me to have a potential buy or sell. So I'm really not concerned. I'm not gonna I don't blind trade anything. So I'm just gonna go and I'm gonna drop down. So I'm looking at it, okay? Oh, you're very welcome. I'm glad to hear that. So I'm gonna go and I'm gonna drop down to my 15-minute chart, and I'm looking at it. Well, thank you guys. And I'm looking at it, and you can see now, of course, I understand where my support and resistance lines are, right? I definitely understand where they are. So I got my stochastic, my blue line cross over the red, right? Because I can see that I'm gearing up for a buy because it was in a sale. I can see that I'm gearing up for a buy. I dropped down to my 15. I got my blue line cross over the red. I got my green candle with a flat bottom. I got my PSAR. Voila, I have a buy. And I traded it to the next one, and that's 85 pips right there. That was 85 pips that rolled up. You always thought it called trades for the strategy? Oh, no. It's not trades for the strategy. So what it is it's just trades for, what it does is it just helps you make sure you're on the right strategy that you want to trade off of. You apply the strategy, whatever strategy you want to trade, that's housed in a vibrato. So of course, you know, we want to BYOB it, right? That's what we want to do. We're gonna BYOB everything. So, right? So that's what that is. And so it's just to make sure that you're on the right strategy. That's what that is. And so if you change the strategy, then a different strategy, but it'll be the exact same alerts. Because the alert scans the market. It scans the market. That's really all it's doing. It's just scans the market. No, it's an entry trigger. You know, I'm really not concerned because honestly, it's like a setup. So you can honestly wait if you want to. You can wait and you can wait for it to go back around. So like, let's say right now you can kind of see where it pushed up. And so we're at the 80 and you can see where my 4 hours here too. But remember, it's not a signal. So I can't guarantee you that what it's going to do. So typically around the 80, you'd be looking for that to turn back around. But you know, it can still go to 100. That's why that crossover and cross down is very important, because some of these will cross over and cross back down and go ahead and go for the sale. So it might, though, it's a potential, keyword potential. So you got, if you know, sometimes they do turn around and get right here and then they turn for a sale. So you had an opportunity to go for a buy, then it turns around and go for a sale. Like I think this one right here, if I look, this NZD USD, like this was a potential buy. So that, now it hasn't done anything yet. So it was here, right? So it was here, this was the line. I didn't mark the price that it was called at, 2223. So it's somewhere up here is where that price is at, 2223, right here. So if I'm looking at where that price is called at, right? Right there is where that price is called at. So same thing, drop down to the 15 and you can see, and then of course it gets stuck right here on this support line and you can see where it looked like it's trying to gear back up. It was called for a potential buy. So I'm looking at my hour. You got to just follow the rules of the strategy. But look at where my stochastic is right here. So it's been stuck right here on this support line, but now look at where my stochastic is on the 4 hour. So no, I don't expect it to go. It might go in a correction, but I don't expect it to go into a buy as of right now. You always follow the rules of the strategy, right? Got to follow those rules. So it might pull back up some, but for the most part, look at where my 4 hour is. So we don't expect it to push back up. And so I just wanted to pull some, right? I wanted to pull some so you can see that whether I go to the first support line, you know, I grab my 10 pips and cash out, or you can attempt to go to that second one based on what you're doing. But I definitely want to show you, and I actually had, it's not on here anymore. I thought it would have been perfect, you know, but remember these identify harmonic patterns because it's NZD, that this currency, this NZD USD was actually on here as well until like right before the call. And so I was like, that would have been really, really perfect to kind of show you how these tools can actually play together, because I've seen it before, but I thought it would have been a great opportunity because it had actually identified a harmonic pattern. But it, you know, like I said, had identified a harmonic pattern to turn around and take that as well. But to kind of show you how these tools definitely can play together and how that can benefit you as well. But as if they don't play out, they don't stay. So that's exactly it. That's your practice, support, and resistance. That's it. That's what you should be doing. You're 100% correct. Let me refresh that. Where's my stuff at? Yeah, so no, it was at the top, so it's not there. So the harmonic pattern did not play out, so that's okay. But it would have been great to be able to show you how these tools play together. But just know that sometimes they do. And so You know, so that's why they when they collaborate like that together, that's great, 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 where you can actually see that, right? And so I'll go back and answer questions and kind of show you a setup from here too. But I want to show you this. I got to show you this because this was a harmonic scanner trade, right? That we took. And you guys should have cashed out on this. You guys should have cashed out on this. And this is why it's important for you all to understand your support and resistance lines. This was the take profit 3 from the scanner. We marked it up, but I also like you guys to know your own. And this is why, okay? This is why. I told you tonight was tools night. Click, don't mess my lines. Come on, click. Try this again. You don't want to give me my line. Okay, you don't want to change. Ah, come on. I don't want to lose the lines, but this is what I want to show you. So right here, okay, I don't want to click refresh. So, but right here, you can kind of see with your naked eye. I was going to change it to the line and just kind of show you, but you can kind of see with your naked eye where these touches are, right? And so you can kind of see where it turned around at. So you can see with your naked eye where these lines are, where these touches are. So yes, it had the potential to come up to here, but you can see where these are. And so I see a lot of you guys dropping the 777s on these trades, right? I see a lot of you dropping the 777s on the trades before they play out. So something I want to make sure that you know how to do is I don't want you missing the whole trade, okay? If you want to try to ride it out, you know, but I don't want you missing the whole trade, okay? Because I know some of you guys will be like, okay, well, I missed that, or, oh man, it went for, you know, how much did this go for? Because I know some of you guys didn't get into it till it started pushing. So this actually went for about 60 pips. So let's see, you know, but I know some of you guys might have been in from down here, but let's just say, let's just start here with the 60. So let's say up, at least up till 20 pips, like 20 pips in profit, 30 pips in profit. You know, and I can't share, we're not gonna talk about my phone. I cannot share that screen with you. But you know that when you get about 20 or 30 pips in profit, or however far you are in profit, you can actually do what's called a partial close. So let's say if you wanted to, let me see here. So let's say you got to take profit 1, you know, 20 or 30 pips of profit. So let's just say you got up here to about, now have you all 555, if you all have been doing partial closes, you understand a partial close, you know what a partial close is, right? Let me get a 555 in the chat if you know. Okay, great, 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 great. Great, great, great. You do not know what a partial close is. Well, tonight is your night. That's awesome. So, all right. So let's say we get to take profit 1. I'm going to do the best I can without the actual phone. So I'm going to do the best I can for you guys. Now, when you open your phone and you open your MetaTrader 4, let's say you get to like your take profit 1, right? You get to your take profit 1 and you go to open it up. You go to open it up and you go, you know how to do a manual close, right? On a profit. So you know how to go do a manual close. Okay. So when you open it up to do a manual close, instead of, you know how you have to close it and then close it again. You cannot just close it and then close it. You got to close it and you got to close it again. Well, when you go to close it, instead of closing it again, you cannot increase it, but you can decrease your lot size. So if you are, right. So close, exactly, close and confirm the close, correct. So instead of confirming the close, okay, so like let's say you had a 0.50, right, for your lot size, okay? So this is gonna be our lot size right now. So if I want to keep going, but I don't want to risk everything, I want to take partial profit, okay? I want to take partial profit. I can actually go to close and I can decrease it Like, let's say I want to keep it in there just like a 0.10 or something, or a 0.05, whatever it is you want. Like, I don't know what you're trading, right? Your trading is based on you. So I can decrease it. So now I at least have profit on the first part of it, you know, on a 0.40, you know. So now you've taken profit, and now you've decreased it. Now I can't increase it, right? You can't get in a trade at a 0.01 and start making profit. Now you increase it to like a 1.0. You know, I wish we could do that, right? That would be wonderful, but you can't do that. But you can do it vice versa. So you can decrease it and kind of ride it out up to like right here. So that way, if the trade, so for example, for those of you all who have been very timid and not taking these trades, because I'm like 777, like, why they didn't finish the trade out? You know, or you want to at least get to take profit one. Remember, we're here to help you build that wealth. And so you want to at least get to take profit one, and you want to have a larger lot size, right? Because what has the market been doing? We've been getting to take profit one with no problem. So you want to have that larger lot size, and then you can decrease that lot size and continue to try to push and ride it out to take profit two and take profit three. Because you know we're going to get to take profit one. You know we're going to get there. It's just, you know, and you can do that trailing stop loss, or you can just kind of decrease that lot size to get to take profit 2 and 3. So hopefully, like I said, I can't share my thing with you guys, but hopefully that kind of answers your questions or makes it a little bit clear for you. So, and I think by using this, one, you are welcome. So by using this one, you're gonna understand, awesome. You're gonna understand a little bit more market structure, right? You're gonna have to understand just a little bit more, and definitely need to understand where your support and resistance, and you can start with the confluence and bounce back to trade on the 15. And looking at the harmonic scanner, I think this definitely can help you, right? Identifying some trades, and then of course, you know, so like if I wanted this USD JPY, right? Let's come over here. Well, look, this one still haven't played out. I'm not even gonna mess with this one. We're gonna come over here. So this is another trade, right? That still hasn't played out. You're still waiting on the confluence on this one. So this is another trade that's still sitting there. The other, so it might be tomorrow, right? This is one we've been, you know, we've been waiting on too. You just kind of see it kind of riding. You know, we looked at this one this morning. So they've been taking a while to play out, but look at what happened. This one played out for us just fine. So now what was this one? USD JPY. So as you look at it, right? And you can kind of see where it's kind of trying to gear up for a buy, just so you guys understand. So you utilize the harmonic scanner, mark the analyzer with support and resistance line, set and go, or do you have to watch them? No, once you begin to understand how the market moves, you can actually learn how to set your buy stops and sell stops. And when you really begin to do that, then, you know, like this one is not ready by far, right? So if I was to kind of look at where they're looking at an entry point, right? So just to kind of help you understand, you know, this is what I'm just marking it based on support and resistance. So 107.4242, let me see. I must really need to refresh this or restart this thing. So let me just do it. It's gonna make me do it the hard way. That's why we're going over this. It's not letting me do it. So, but now look at this. It's not letting me do it, but change this to the line chart. Ah, we did it. Yay. Okay. So change this to the line chart. So why is that? Because you should be looking down here, right? You should be looking down here because you should be looking at these touches. These are closing prices. So I'm probably going to cushion this up just a little bit. And so if you go back and you kind of bring this back and forth between the harmonic scanner and the both of these, is really going to help you, right? It's going to help you. So that's going to help you identify your support and resistance lines. I can guarantee you, if you do that, it's going to help you see the market a whole lot clearer, right? And then of course, let's change this back to my Hikanashi candles and you can kind of see where we are. So definitely this trade is not ready. You kind of see where we are on the hour. And then I go to my 4 hour. My 4 hour still has some room to push down. So your entry point, understand, right? Your entry point shouldn't be a problem for you because what you're doing is you're looking for the confluence, okay? You're looking for the confluence. And if you do the setup, right? As I just told you, what I just kind of went through was price action, right? We just kind of went through price action when we talked about it over here. So as you're trading and you understand when we talked about this right here, that's basically price action, okay? And so what the BYOB cash out is price action with a twist, okay? So it hits on those areas. So these are trend candles, and that's why it kind of looks like, if I change to the 4 hour, it looked like it just, look at how it looked like the trend line just rides on the candles because these are trend candles. And so you never really see me drawing a trend line, but if a trend line will help you, then put the trend line on here. You know, it's a trend candle, but if a trend line will help you, put the trend line on there. Because you know, if you understand price action, when it breaks the trend line, then that's your entry point, right? But put it on there, it'll help you identify that. So you're gonna get the same results. It's the same thing. Because what you're gonna notice is when it breaks that, it's actually when that blue line cross over the red and da-da-da-da-da, right? So blue line cross over the red candle with a flat top, green candle with a flat bottom, PSR flip to the top, PSR flip to the bottom. And so what we're doing is helping you understand that you do not take this at price value. You do not take this at face value. This is not a standalone tool. The only thing this does is identify harmonic patterns in the market. That's why the one that I was looking at was no longer there. It identifies harmonic patterns in the market. Harmonic patterns are very, very good because they identify turnaround points, right? They do identify that, but it's not a guarantee that the market is going to turn around at that point. So you definitely want to come back around and you want to actually apply the BYOB cash out. That's why I say bring everything back over here and let's BYOB it. And that's why we had the increases that we had this month. That's why we had the setups that we had this month. That's why, you know, we had actually everybody doing what they did because they're plugged in. And I mean, that's why that success is there, because if I got this strong candle that's right here, okay, and I'm looking at this, right? If I'm looking at this and you see that this is a 4 hour candle, you see that this is a 4 hour candle and I'm only an hour into it. So if I'm only an hour into it, then guess what? Why would I do that? What do you mean, do I only take signals? I don't take any signals. I'm not taking any signals. Yeah, you had to miss Tuesday. I'm anti-signal. But what you do is, this is not a signal, okay? Just like this is not a signal. So you can do naked chart trading if you want to. But what this is you have tools that help put you in a position of profit. Why not utilize the tools? Because they do some heavy lifting for you, right? You enroll into the university, you're going to learn a skill set and you're going to learn how to utilize the tools that's going to put you in a position of profit. So if you have a harmonic scanner that actually scans the market and identify harmonic patterns, that's not a signal. It identifies harmonic patterns in the market. You have the bounce back that identifies trends in the market. You have the vibrata that identifies triggers that happen in the market. And this is actually a tool that is very comparable to what the big banks of the world utilize. This is the same type of tool that has actually been vetted. So if my bank that uses my money that flows through my bank account, if the banker, right, the banks use the tools, right, to trade my money, why wouldn't I utilize tools to utilize and do the exact same thing? So let's not make it harder on ourselves, right? You working smarter and not harder. So that's really what it is. So we got 5 minutes, but we got 5 minutes, so we can do that. So we have a lot of tools that are available for us, and I want to make sure you understand that. We got a lot of tools that are available for us. So definitely you want to understand that. So BYOB Challenge is the YouTube channel. BYOB Challenge is the YouTube channel. So BYOB Challenge. You can do your own head. You can do the heavy lifting. But you want to follow the rules, just follow. There you go. Follow the rules and 777. Follow the rules and do a 777. I promise you it's going to make a difference. What I do is I train you and I show you how to maximize the tools, the rules, and let the market begin to speak to you. And so as you begin to do, and do your homework, tell them, Keith, do your homework. So, you know, it will help you. And when you utilize these, you utilize what you have, it's going to help. So what is this homework? And this is going to help you with your support and resistance lines. So just like we're sitting here at USD JPY. So I'm going to run through this one good time because we do need to transition this call. So I'm going to run through this one good time. So now look at what we have. So these are nothing more than support and resistance lines, okay? No matter what strategy, now come over here to look at the support and resistance lines, not to trade it at this moment when you're coming over here to help you identify support and resistance lines. When you see the support and resistance lines, the market will begin to open up to you, okay? You will begin to see things a lot differently. So understand that these, so forget about the harmonic patterns, forget about all of that. These, look at the support and resistance lines. And the reason I'm saying that is because they're already identified, okay? So I want you to bring this back to the vibrata. And when you do that, you're going to turn this to a line chart because the line chart actually helps you see where these points and where these touches are, okay? The line chart uses the closing price. It uses the closing price. And so what you want to do is you want to come through here and you want to drop the lines and you're looking for touches. So like I'm looking for touches. I'm looking for multiple touches. You need about 2 or 3 good touches, right? And that's going to help you draw a support and resistance line. Like with the one we just drew, look, I got 1 touch here, a touch here, a touch here. And if I keep going to the left, I have another touch here, okay? Don't overthink it. Don't overcomplicate it, okay? And then when you get done, switch it back to your Hikinashi candles and you'll be able to see how and where it sits on the lines. Come back over here, right? Come back over here to the harmonic scanner and just check it. You just check it. You just check it against these numbers like you do when we were in school and you check the answers in the back of the book, right? Aha, wow, you had a light bulb moment. I love that. So, and you see it clearly. Yes, and that's what's going to happen. And you check it like you do in the back of the book. And why is that? Because you're not always sitting with someone. You're not always able to sit down with someone at that moment or at the same time, but it's going to help you. Do at least 10 of them. I'm telling you, do at least 10 of them, not 1, not 2, a minimum of 10. okay? A minimum of 10. And watch the transition that happens with the charts. Watch the transition that happens with the charts, and then you'll be ready, okay? Just watch that transition that happens with these charts, and you're gonna be like, wow, okay? So that's your homework. And I got a testimony in the chat. He keep telling you guys, do your homework, do your homework, do your homework. He said it helps a lot. And after you keep using it, you'll automatically see the support and resistance for higher time frames, and it really helped them a lot. See, thank you for that. Thank you. It does, and you'll begin to see them with just your plain eyesight. You'll begin to see them without having to go to the line chart. Of course, I still like the line chart, but you'll begin to see them without you. I mean, you'll just begin to just, okay, you just start dropping lines, and you'll just start seeing, look, there's another one, there's another one. You'll just start seeing the lines, and you'll start seeing how the market moves, and you'll start seeing those turnaround points before you even drop a line on the chart. And the market's gonna just start talking to you. The market's just gonna start talking to you. And when that market starts talking to you, your trade account is gonna start increasing. And that trade account is gonna start increasing. And then the more you use your discipline and that compounded sheet and proper lot sizes and stop losses and everything else, I guarantee you, you're gonna be in that position of profit. How do we get to the harmonic scanner? Okay, good question, good question. IMLharmonicscanner.com. I know that it's in IM.center. All of this stuff is in IM.center, but I have it pulled up at IMLharmonicscanner.com. IMLharmonicscanner.com, because, you know, I literally like to, before they combined it all in the IM.center, I still go to the single websites. You notice I didn't say go to MetaTrader 4 to do it, right? It's not gonna be the same. So there's the site, you should be able to see it. Like you can get to everything through IM.center, but I still like to utilize the, I still like to come to the individual sites. And so IMLharmonicscanner.com. Go to the playlist, right? It should be, go to the playlist, Trading the BYOB Cash Out. Go to on you BYOB challenge. So BYOB challenge, Trading the BYOB Cash Out. I try to put most of those videos that in that same playlist that should help you really launch and get started and using that stuff. Help you understand the liquidity in the market, right? Help you understand the liquidity in the market and everything else, because guess what? You will not be, it'll help you understand all of that. So you wouldn't be asking me for CHF. It's on the YouTube channel. It's already been uploaded. So definitely already been uploaded. All right. But only half of it, because the first half cut off.